Hello guys, I guess this thing is on. So we are going to look at supply and basic trading concepts, my new trading concepts. Yeah, so on top we have supply and below we have demand. So I've put my concentration on the past 1, 2, 3, 4, 5, 6, 7 months. That's where my concentration is gone. And up we know that we have supply, down we have demand. And when price, this is just the basics of supply, when price goes into the supply zone, we expect price to start pulling down to a demand zone. This is what we have seen. There's a supply zone, there's a demand zone. Follow the arrow, supply zone, demand. Price comes into the demand, it creates a supply zone, comes back into the demand, follows the demand lower. Basically that's how price has been moving. And now price is leaving a demand zone, it has entered a supply, and it's expected to go to a demand and then reach out to another supply. Going on a weekly time frame, or before you go to the weekly, so basically that's your supply and demand thing. I've not gone into depth with it because yeah. So now what do we notice? 1, 2, 3. If you look at this supply, this, that supply, and that supply in the 3 months, after these 3 months the market retraced and then it failed to go below this demand level, and it has not broken but created an equal high. And relatively equal highs are points of liquidity, and since they are points of liquidity, we expect price to trade through them. Okay, we expect price to reach out. So in the near months, maybe March, April next year, you'll see price coming for this this supply zone, or this high. You expect that to happen. Why? Because anyway, those are the laws of supply and demand. So these relatively equal highs will have to be traded through after price finishes its agenda. So now to find the monthly bias is clearly bearish. Although the shift is bullish, the monthly is clearly bearish. So we'll have to wait for the monthly to turn bullish for us to start buying off into this. Yeah.